grand afternoon, I would say. It's a pleasure to be with you. I'm Rémi Rioux, the CEO of AFD, the chair of Finance in Common. I'm also the chair of GFIC. I will talk about it. And I'm extremely pleased to be with many friends in this room. Of course, Finance in Common is a global platform, as open, as inclusive, as vibrant and positive as possible, especially in these very difficult times we're in. And I hope you felt like I did the good atmosphere, the feeling, but at the same time people being very focused in the discussion. And I think we are at the right level of discussion so that we move forward, and what we are doing is also perceived in other rooms, notably the one on the other side of the building where the ministers of the G20 convened under the presidency of South Africa. So it's a global initiative, but I'm here to thank particularly European colleagues for being here. Of course, with African, South African partners, and maybe say a few words about it. What's the contribution of Europe, and what's the contribution of the partnership between neighbors in Africa and in Europe to the FIX global initiative? I'm always reminding colleagues that the first, I would say, interaction between the European Union and the rest of the world is development. I mean, there was no, in 1958, when we set the Rome Treaty, we created the European Development Fund, and there was no ambassador, there was no foreign affairs, foreign policy in Europe. There was only this first visage that was investing in infrastructure, in basic services, and do it extremely ambitiously. And the other things I'm always struck to have to remind people is the size of Europe in development finance and climate finance. Well, we know what's happening these days, and there was a bit of a deal between let's say the US on the security and humanitarian side, and Europe that was in charge, that was mostly responsible of development finance. So US is 3 times bigger than the European Union in defense and humanitarian spending, and that's an issue, of course. But I remind all of you that European Union plus UK plus Norway is well about 3 times bigger than the US in development and way bigger in climate finance. So this is our signature as Europeans. This is our force, what we are bringing to the global discussion. And of course, we have to do more for our sovereignty, our defense. And I will be in Brussels next Wednesday. I think we have to keep the flame, keep the ambition, while also hearing that this world of ODA is rapidly transforming. And this is what we are discussing here at FIX. Second, of course, since 2019, until here, we have worked a lot between European partners to structure the European proposal. And this proposal has been named Team Europe. And I think we have to stick to this Team Europe motto and process. And for colleagues in the room, Team Europe is built with 3 pillars now. We have what is called the GEFIC partnership, which is the gathering of the public development banks financing the public infrastructure. And so it's ICID, Anton is here, KfW, BGK of Poland, AFD of France, and Cassa Depositi e Prestiti. That's one. We have the European DFIs. They're in the room as well. So it's the public development banks, the DFIs financing the private sector. And we have, Jeremy is here, we have the practitioners network, the expertise, the implementing agencies of Europe. And these three pillars are joining forces, working together, of course, following the guidance set by the European Commission and also by EIB, to Raya, which is, of course, our NEBRD, which are very close to us, national institutions, to deploy a joint offer of financing and non-financing services. And I would add probably the export credit agencies of Europe that are also progressively structuring as, let's say, a fourth pillar in this architecture to serve our clients and partners. So somehow the discussion that is happening at the global level about the global financial architectures, we are trying to anticipate, we are trying to build it as well and propose something that is more powerful and that is more efficient maybe than if we stay all by ourselves. And the third element maybe I want to put in the discussion is, of course, the Global Gateway initiative launched by the Commission. And the Global Gateway is another step in building our partnership and in working with partners around the world, especially in Africa. And Global Gateway is really this message that we have to combine wider, stronger energies, and that we have to do it with the private sector and private finance way more than we were able to do it before. Yes, we have to change the narrative from assistance to investment. Of course, investment of the expected, of the right quality in terms of sustainability, but investment, meaning there's a return. A return in many kinds, but something that we are proud of and something that changed the lives of our own fellow citizens and those they want to interact. So that's what we are building, and I will of course hear from colleagues their own perception and what are the next steps. And of course, those that are the best place to tell us what is next steps are our friends and clients and partners we are co-financing, we are working with in the countries. And of course, here we're extremely proud to have Transnet, to have South African colleagues in the room in a frank discussion about what's working and what's missing and how we could move forward and improve our collective answer. Just before I was signing an MOU between our two directors here in South Africa, Audrey and Cordelia, between KfW and AFD. We are both fully committed to, and we're on track to satisfy our pledge to support the just energy transition through the partnership and the country platform building up in South Africa. But of course, we know the challenges, and we know especially that we have to do way more to mobilize private finance, because it will not only be through public investment that the transition will happen. So all this comes back to FIX. I think, of course, we are about this partnership, but you understood from this introduction that it will inspire. It can inspire, hopefully, way beyond this panel, this discussion tonight. Thank you.
Thank you so much, Mr. Rio, for opening and for your inspiring message. I've had a look. I see your SDG pin, and it's something that I believe with the very fiber of my being, the values of the SDGs. And there's something that you said yesterday. We have to join forces for good. And this thread of a team, of coming together, and standing together, I hope, in 2030 with a value system that we share. Thank you for that, and I think with that it's rather apt to open a Team Europe session, because the idea of a team is about joining people and joining and coming together. So with that, I'd like to ask Antti from the European Union just a little bit around Global Gateway. Perhaps if you could give us some idea around what Global Gateway is before I take this any further.
Thanks a lot, Commissioner, and I would like to really thank Remy, you for your very important messages to start with this discussion. And what a great pleasure it is to actually to kick off amidst so many familiar colleagues from Team Europe, but also with so many important partners that are participating in the fix. So I thought it fitting maybe if I start by giving a bit of a broader view of what the Global Gateway and what Team Europe actually are about, how they came into being, and how they actually make us much stronger working together. So Global Gateway is the EU's external investment strategy to advance SDGs together with the partner countries across Africa, Asia, Pacific, Latin America, the Caribbean, and the EU's neighborhood. The aim of Global Gateway is to support transformative infrastructure projects in partner countries, and thereby create sustainable prosperity and jobs, and strengthen the connections between the EU and the partners. So the strategy supports both the public and private sector actors to invest in infrastructure. The focus is on climate, green energy, sustainable transport, digitalization, health, education, and research. The Global Gateway is the EU's comprehensive offer to support countries that seek to enhance their resilience in a sustainable manner and strengthen the mutual partnerships that are beneficial for the partner and which also support EU's strategic interests in the world. Global Gateway aims to mobilize 300 billion of public and private investments by 2027, and it does so through a combination of blended finance, guarantees, as well as grant resources, in the form of also technical assistance, budget support, all parts of the toolbox that we have. So in fact, between 2021 and 2023, the EU, its member states, through the DFIs, national DFIs, the EIB, and the EBRD, mobilized investments worth 179 billion euros in support of Global Gateway. So we can say that we are very well on track with our offer, and the mandate of the current Commission, which started this year for the 5 years, is still to scale up Global Gateway from the startup, which has moved along so well. Global Gateway takes a holistic we call it 360 degrees approach tailored to partner countries' needs. This means first that investments adhere to the principles of first democratic values and high standards, good governance and transparency, equal partnerships. They support investments that are green and clean, and the Global Gateway catalyzes private sector investment. The second, in addition to financial risk sharing, the Global Gateway supports an enabling environment for sustainable and quality investments, promotes high social, environmental, and governance standards, And thereby, what we aim to do is to provide an integrated investment package to our partners. Private sector mobilization is actually the real key for the success of Global Gateway. We all know that global investment needs can only be met if the private sector finance is mobilized at scale. And the EU has set up a 40 billion European European Fund for Sustainable Development Plus. It's a guarantee and blended finance program, and that's actually the backbone of Global Gateway implementation. This covers both sovereign operations, which are dedicated to the EIB together with sub-sovereign part, but then what we call an open architecture, which is dedicated for private sector investments, and on which we work together with some 20 or so European DFIs, the EIB, the EBRD, but also provide guarantees to the IFC, the AFDB, and the UN CDF. Global Gateway is being rolled out across the globe. Investment packages were launched with Africa, with Southeast Asia, and the Pacific, Latin America, and the Caribbean, and Central Asia. And currently, we have over 250 Global Gateway flagship projects that are being implemented with our partner countries. So you may ask, how does Global Gateway relate to partner countries and their government's priorities? So I'd like to say that partner country ownership of Global Gateway flagships is part and parcel of the strategy and its principle of equal partnerships. When it comes to national level programs and projects, ownership is very much rooted into the daily work of our EU delegations to closely align the Global Gateway project with each country's development plans and priorities. And project can also be co-led by partner countries' national agencies, as, for example, is the case with a program that we have in the Philippines, the Copernicus Earth Observation Program, which is co-led by the Philippines Space Agency and the government's Department of Science and Technology, just as an example. We also ensure that the Global Gateway is aligned with regional and continental priorities. For example, we agreed on a joint vision for 2030 with the African Union at the EU-AU Summit in 2022, and our Global Gateway actions are also a contribution to advance the African Union's Agenda 2063. Then I come to the Team Europe and what does that bring to the Global Gateway. So in an environment of growing geopolitical challenges, joint strategic European action has never been more necessary. And it's really, I think, great to say in this room and more widely that the EU will stay engaged. In response to the COVID-19 pandemic, the EU introduced this Team Europe approach, a new method to join forces between the EU, our member states, the DFIs, European Investment Bank, and the EBRD. And the idea was to maximize our collective impact. Beyond funding, it also is a very helpful tool to pool expertise, nurture more strategic culture of cooperation, and it has become the delivery method for the EU's international partnerships. So the Global Gateway is delivered through the Team Europe approach, and uniting our EU forces and the firepower that we have together allows us to have a very strong impact. Joint missions with the European Commission and the Member State representatives are one great way of showcasing the team spirit of what we are trying to do. Finally, and I just would like to briefly give you one example of a Global Gateway flagship program. This is the Team Europe Investing in Young Businesses in Africa initiative, which I think is a great example of how we try to work in this 360 degree comprehensive approach within the Global Gateway. It was launched by President von der Leyen, President of the Commission, in Paris in May 2021. And it's at the core is that we support early-stage businesses, local SME ecosystems, and entrepreneurs across sub-Saharan Africa to start and grow their businesses. And it does so by enabling them to access financial and technical support and thereby help create decent jobs. This brings together the EU, 11 EU member states, the EIB, the EBRD, and the ETFIC group. And I must say that our partners here have been taking a very, very strong role and leadership role for this initiative. We are very thankful for that. So our colleagues in the panel may wish to actually share more insights on the Team Europe WIBA initiative. We just think that it's a powerful example of how highlighting, Team Europe in action, we can be stronger. Thank you.
Thank you so much. In keeping off this panel and the rush to get you out of here, I was reflecting on the start of this, and one of the things that I was thinking about is particularly thinking about, this is a session about market creation. It's about creating new markets, and it's about scaling existing investments. I particularly like the Team Europe approach. Part of the reason I was reflecting on it, I put in place policy in 14 countries. That's not an easy thing to do, and I thought about what is it going to take to bring a team together, what is it going to take to make change happen. And what I particularly like about what you're saying, I think, is the strength of the tools. You need to have a strong toolbox. You need to have armies of people who believe in what you do and want to do what you do. And you're able to take this across the finish line. So I do like that analogy of the team. With that, I think the idea to pass the conversation around with the practitioners, pass the team that are working on this. This is, as I said, a warm-up session. It is not a speed dating because they fail. It is a warm-up session because all good teams warm up. They practice often and then win at the end. So this is a warm-up session of many, many conversations that's going to happen over the coming months. So with that, Kaval, I think if you could perhaps give us a little bit around the FMO's market creation facility. What is it? What does it seek to do?
Yeah. Thanks, Kami. Good evening, everyone. So maybe just quickly, for FMO, we're the Dutch DFI, and we're focused on emerging markets and private sector, right? And Africa is our biggest portfolio. So I want to talk about market creation in Africa specifically. So pipeline is a big challenge, finding deals, finding transactions, bankable transactions. And the challenges are really size of the companies that we find in the markets. And for the companies, their ability to successfully demonstrate their track record, which is a big challenge. And hence we came up with market creation as a tool or as a platform to address these barriers and challenges. So market creation is actually a pivotal ambition within FMO's 2030 strategy, which is pioneer, develop, scale. And the idea is to generate more investable opportunities, not just for ourselves, but also for the DFI community in general, and also for the investor community as well. But at the same time, to contribute towards the private sector development. Our funding for this market creation is coming from the EU, also from the Dutch state, and FMO is contributing our own investment skills, our network, to address these barriers. We're trying to strengthen entrepreneurial ecosystems in these markets, especially in Africa. And we're also trying to improve the success rates of early stage companies, just to broaden the inclusive and impactful pipeline of businesses. We essentially see it as a bridge between donor money and development finance that comes along with technical assistance and capacity development to really help upscaling and commercialization at the end of the day, right? I think an example of one of the programs we have on the market creation is ARIA. So ARIA is the African Resilience Investment Accelerator. We're doing this in partnership with BII, and Proparco joined this year, so that's the Brits and the French. And ARIA works specifically in Benin, in DRC, Sierra Leone, Liberia, and Ethiopia. And we're trying to connect companies within these markets to DFIs to provide them with investment readiness to support long-term sustainable investments for those companies in those markets. We also have another program called DFCD, which looks at climate-smart mitigation within agri and energy. That's together with SNV. I think Simon's somewhere around here, yeah. And WWF. That's another program. We have others as well. But in the interest of time, I can't talk about all. But with this vision, we're trying to learn from these initiatives and also develop an open architecture platform to create this market creation platform, which then creates an avenue for a range of partners to actually join us and co-develop and deliver the interventions of market creation in a coordinated manner, all right? We're also working on a prototype platform with the funding support coming from investing in young business in Africa from the EU. And we're going to test this platform as a concept by providing financial and technical support within the African entrepreneurial ecosystem and nurture these young businesses to be investable. And lastly, we're encouraging more partnerships. We're looking for partners to join into this ecosystem and really leverage on the strength of Team Europe to be able to support these young budding businesses that could be. Thank you.
Thank you. Thank you so much. Market creation is not an easy job.
Yeah.
It was my day job for almost a decade. And all great attributes to that and making it work. Now I want to come over to this side of the table in terms of tell us a little bit about SMEs. What are the types of SMEs that you're finding? How are you working with IRA? You run all these investments. So it would be great to hear what is the ground looking like.
Thank you, and good evening to everyone. Thank you. So Goodwill Investments is an impact investment fund that has been operating in 3 key regions in Africa for over 20 years, Southern Africa and East Africa and West Africa. And our model really and our theory of change is really simple in that we seek to drive social impact, and how we do that is we put money in businesses whose business models is very much integrated with doing good on the ground and servicing end users from the base of the pyramid. And how we then derived how we would make the greatest impact was to look at where the allocation of household income gets allocated. And when we did that analysis, it was around financial inclusion, meaning financial services. It was around food security, meaning we invest in the agri sector, as well as mobility and logistics. And we've been doing that for over 20 years in these regions that I'm talking about, with ticket sizes of around $500,000 to $5 million. And our partnership with the IYBA was quite natural in that not only do we seek to drive social impact on the ground through our investments, we see that as a structural, activity and exercise that needs to be achieved with multi-stakeholder partnerships such as the IYBA, as well as seeing our role in really developing the ecosystem from the ground up as something quite needed for us to also, drive our own pipeline in future. And so our partnership, therefore, with the IYBA, quite natural in that not only do we have the experience on the ground, but really fits into our goal of driving the ecosystem in that, we're focusing on 4 regions, Tanzania, Kenya, Malawi, and Mozambique. And we are practically providing concessional loans and SME guarantees to businesses that are quite below, our natural sort of ticket size that we offer, but we see it as quite necessary as to develop the market over time as a long play that we use there. Yeah.
Not easy markets at all.
Yeah.
Simon, I want to come over to you, which is, you may have perhaps the hardest job around market creation. What can be done to strengthen the early stage investment pipeline to ensure a steady flow of investable opportunities?
Yep, great, thank you, Cami. It's a pleasure to be here. Good evening, everyone. I wouldn't say I've got the hardest job, for sure. I think we've all got hard jobs in different ways. And I guess I want to kind of frame my remarks around what Remy said around the need to generate efficiencies and what you said, Cami, around joining forces within a team. And Antti, perhaps building a little bit on what you said, SMV, I can say largely we're probably on track or on the right track. We're in IYBA seed program. We're in the investment climate reform program, of course, with Expertise France, GIZ, and other wonderful European actors, and of course, many partners in the countries of focus. We're delighted, and it's great to speak after you, Kaval, at FMO. We're in the Dutch Fund for Climate and Development. That's now, and it's a very innovative collaboration mechanism, it's now close to €500 million in funding, initially from the Dutch government and then built out with EFSD plus funding. We have worked now with about 40 companies in trying to originate deals of between 10 and 15 million euro, things like tiger shrimp farming in the mangroves, very precious ecosystem in the mangroves of Vietnam, a company called Camomex, more saline-resistant rice in Bangladesh in the face of increasing salinity levels over there, horticulture company in Kenya, a country where 40% of horticultural produce doesn't make it to market, and even on the high-risk side of things, company called Equatorial Teak Company in Western Equatorian Yambio, a place where I lived 2005-06 in South Sudan, so highly fragile environment. That's great, but I'm absolutely not here to sing SMV's praises, and so the challenge, I think, to us all is those are nice deal originations. They're a nice mobilization of concessional financing of ticket sizes between 10 and 15 million euro. But we've got 4 other projects right now that aren't graduating. We've got 10 or so that we're in discussions with, and we don't have a clear, easy, effective, swift mechanism to hand over those investment opportunities to the EIB or to Proparco or to the IFC, yeah? So we have to crack the nut or smash this nut around how we collaborate better between the practitioner organizations and the DFIs. We also, with our wonderful colleagues and friends at GIZ or Expertise France or Enable or ICID or others, we need to better harness our collaborative ability to generate or to originate those deal opportunities. And my big worry, and Antti, if I may this where I slightly disagree with you, I think we're not on the right track here. We're not on the right track around how we collaborate better. 1993, I was 500 meters away from here, shortly after Nelson Mandela came out, before he became president, when there was that huge euphoria and that optimism, and my career journey took me on into all sorts of wonderful but very fragile parts of Africa, and I was part of those movements to try and enable shared value creation with businesses. I saw the optimism around multi-stakeholder capitalist approaches and some of the big business leaders really championing that. But we're now absolutely in an era of hyper competition. And the danger is some of the catalytic grant money that we're having to use is being increasingly squeezed or orientated not towards climbing that financing ladder, not towards an impact capital continuum, but to catalyzing further grant money. And the challenge there is that increasingly squeezed and constrained grant money needs to be going to those really, really high-risk humanitarian contexts. And if it's not making it there, how are we going to get money into those places? So my kind of slightly emotional plea here is we have to move away from the hyper-competition model. And look, we're the like-minded folks here. We're aligned. We're the development practitioners. We should be able to solve this within 24 hours, but it's a mindset shift that we have to embrace now to get away from the hyper-competition. And one collaboration model is how we as practitioners work better with the DFIs to enable this. Thank you.
Thanks, Simon. And also perhaps an ideal point to switch gears from the market creation, the demand section of the equation of how, and moving forward to how capital is allocated. So following on from Simon, how do we allocate capital? How can we get capital to where it's needed? And how can we scale those that are already functioning and in need of more capital? So with that, Thoraya, perhaps if you could tell us a little bit of what do you look for in investments at EIB?
Thank you very much. So maybe I would like to start by underscoring that the EIB actually is a very good illustration of Team Europe, because we had the 27 member states that came together and funded the EIB, and that today allows us to deploy resources and investment at scale. Just to give a sense, over the past decade, we have approved 24 billion our own resources, and about 35% of these resources went to financial lines of credit. So, because you are actually focusing on the supply side. So, having mechanism through which you can foster this integration and pooling resources together for a higher impact is something that we should definitely pursue. That's, of course, there is also the model that was mentioned by our colleagues, which is enhancing coordination, but still, there are still inefficiencies into the system. So as EIB, what do we look at when we do an investment? Few criteria. The first one is how aligned is the investment with our priorities. I think Antti mentioned Global Gateway earlier. As the EU bank, we are very much focused on the delivery of what we are promising through the Global Gateway. So this is one of the key things. And of course, the spirit also of Global Gateway is to deliver win-win partnership for the EU and the developing countries. Second is the impact. So very often we talk about scale, and we try to mobilize funding and to provide either the patient capital, the de-risking tool, whether it's, the first loss, thanks actually to resources provided by the European Commission or other donors. But we also spend a lot of time as EIB ensuring that the quality of the resources. And by quality, I mean one, proper targeting to market segments that are underserved, so negotiating that some of these resources need to go to youth, to women, to countries in fragile contexts, to people who would not have the capacity and the ability to be funded. And we have actually sometimes dedicated initiatives that are focusing on this. One of them is the Boost Africa and the Boost Venture Africa. That was the second phase that has been done in collaboration with the European Commission, the African Development Bank, GIFIC, and the ETFI. We also spend a lot of time and try to mobilize resources for technical assistance that either is challenged through the EIB, and then we hire entities where we seek synergy. So we have, for example, deployed through the Central Bank of Tunisia lines of credit, and we have Expertise France, who is providing the necessary technical support. We are running a program called the Greening Financial Sector, where we are having a systemic approach to change, actually, and greening the financial sector. That is funded by Germany. And actually, I can probably find examples. I can go on and go on, but I know I'm quite mindful of the time. Third, we are also looking for what we call additionality, which is meaning that we need to bring value added. So when we are funding, we need to be very careful that this is not something that we can be funded by the private sector, because we are here to fund market failures and to fix market failures. And of course, the scale, the sustainability is something important. I think today, and just to borrow on what Simon said, we really need to, I mean, it's good to test a few ideas, but we also need to focus some of the efforts on scaling up the things that we know are working. And that means also working on reducing the fragmentation. Today, in a world of artificial intelligence, of the digital tools, I'm sure that, I mean, I'm positive, I mean, like Antti, I think that we have came a long way, and they have a lot of good examples. I mean, the investing in young businesses in Africa is a very nice example. We are very proud as EIB of chairing, actually, this initiative and contributing to it. Of course, we can always do better, and that's why we're having this conversation today. So, I mean, definitely this is an area where we are very keen to engage with other Team Europe. As you said, continue the conversations.
Thank you so much. Ladies and gentlemen, we haven't planned this, but I really like the way the handovers are working. Nadia, perhaps tell us a little bit more around European Partnership on Capital, around MCAF and what you guys have done.
Sure. Good evening, everyone. Allianz Global Investors is a 500 billion euro asset manager. I represent the private sector, and private capital mobilization has become a word that I hear quite a lot in the room. So maybe MCAF, or the Emerging Market Climate Action Fund, that reached its final close late last year, 450 million, can shed some light into what scalable partnerships could look like. So MCAF is a partnership between EIB and Allianz Global Investors, taking advantage of the strengths of each of the parties in the equation. So it's a little bit of that theory of change coming to practice. EIB, as originator, somebody that knows emerging markets very well, with strong ESG experience, helps us, and we co-invest alongside them in local managers as well as direct investments, focused on climate. Often we are first-time fund investor, often we are supporting the first close of such funds. And we have really focused around both climate mitigation as well as adaptation. Some of our partners here on the table. It's a blended structure, which means that it's tiered. 1/3 of the capital comes through junior investors, and 2/3 comes from institutional investors as well as the EIB. What is impressive about this fund is that it actually funds equity. A lot of the scaled blended finance structures focus on debt, as well as many of the balance sheets of development finance institutions. But we all know that unless we have equity, there won't be any use for our debt investments. So we need to put that early money into the ground, scaling capabilities of local managers, and bringing technologies and infrastructure to scale.
Thank you so much. With that, I am going to go across to Paul. And I want to ask a little bit about DFIs. What do they bring to the table for a fund? And what are you finding are some of the obstacles to investing in scale?
Thank you very much. So I'm Paul. African Infrastructure Investment Managers is an equity infrastructure investor across the continent. We've been operating for about 25 years in the space and currently manage just over $3 billion across more than 20 countries on the continent. And a key part of that has been our engagement with DFIs. The answer from our perspective is very straightforward. They bring capital. And I think that's often overlooked in terms of alignment on ESG, on other compliance, on business integrity. Those are all very important parts of the discussion. But our role as an asset manager is really to match supply of capital to demand for capital. And a big part of that supply of capital is down to mandate. In our last fund, we had a very successful fundraising. We went out to more than 1,000 LPs across the planet. 85% of those LPs declined off the bat based on mandate. They are not able to invest in emerging markets, and more specifically, not able to invest in Africa. The remaining 15 we had meetings with the majority of them, and we were able to close almost a quarter of those into our fund, which is a very good closing rate. And half of the capital we closed in came from DFIs, the other half came through from institutional investors. So there's no doubt there's a very big scaling impact and mobilization impact supported by the DFIs. But the key piece to me is really speaking to experienced investors who've got a mandate in the jurisdictions and the sectors that we're investing in. And that means that the depth of discussion goes far beyond talking at high level headlines on perceived risks, on political risks, on some of the macros, down into the real micro opportunities and market inefficiencies that we're accessing. In terms of the opportunity to scale, I think it's also important to consider scale as a very relative term. Globally, a large-scale infrastructure fund is anything north of $10 billion. Now, the entire African market only raises somewhere around $1.5 billion a year. So in the African context, by our reckoning, there have probably only been 4 funds which have closed at more than $900 million in the last 20 years. So scale in Africa is coming through at probably, in our mind, somewhere around a $500 million fund. And that stacks up quite well, because if you consider the entire GDP of Africa is around somewhere around $2.5 to $3 trillion, depending on the numbers you're using. That's only 10% of the size of the GDP of the US. So the markets that we're dealing in are smaller. But we also need to then look at rather what are the obstacles to scale. It's how do we create that scale? The reason we're all sitting around here is because Africa has got immense opportunities for growth. And as an investor into value-add and growth infrastructure, we'll be looking at how do we get into certain sectors, into certain countries, where we can put $30 to $50 million to work, but making sure we can continue to support the growth of those companies and those platforms up to $100 million ticket sizes for ourselves. If we were sitting around looking for $100 million ticket sizes, we wouldn't be deploying the capital that's been invested with us. So I think it's really to the point of market creation. We're all seeing the opportunities all over. It's being nimble enough to take those opportunities and being disciplined enough to focus very much on the sectors and the markets that you know about and you can really execute against.
Thank you for that, Paul. And I like being the eternal optimist. I like the optimistic note because it is the challenge of creating the markets. It is the challenge of creating the spaces. I think the spaces are there. It's a lack of imagination in making it happen and making it work. So thank you for that. I do like it. And a little bit closer to home, and we've talked a lot about money as a concept. We've talked about markets as a concept, and I want to come down to the nuts and bolts of someone who runs real things like railway networks. Nozipo, if you could give us an idea, infrastructure entities like Transnet play a significant role in a country's growth. And they play a central role in national development objectives. And I've seen this across many, many countries, and Transnet is no different in South Africa. Can you tell us a little bit about how Transnet investments link up and ensure contribution to the national development objectives?
Thanks, Kemi, and good evening to everyone. I think there's a language that is acceptable to us from Transnet, like on track. So when people start talking about train wrecks and all those things, we get very troubled. So Transnet runs the infrastructure, the rail infrastructure, the ports infrastructure, as well as the pipeline infrastructure in South Africa. So just to put it in perspective, our rail infrastructure is approximately 30,000 kilometers of track. Our pipeline network is some 4,000 kilometers long. So it is a significant infrastructure owner, a significant infrastructure operator. But amongst the challenges that we currently have, or maybe let me talk about priorities. Our priority is, because of the age of our infrastructure, is to fix the infrastructure. Now, for us to fix the infrastructure, I think this is where the financiers, the lenders, the investors will see opportunity, because then it means there's capital that needs to be invested into.
To the panelists, if you've got any questions, but also I'm well aware that anything about a team and creating something new, we could have forgotten. Jeremy, if I could start with you, and then I'm going to go around. There's a few people that I'd like to get their feedback, and I'll open it up to the floor. Over to you.
Well, thank you very much. I hope you can hear me despite this very noisy echo. Creating markets is an absolutely key question, not only for PDBs and DFIs and investors, but it's a key question for the countries themselves. I mean, that's the basis of the creation of growth and jobs in the countries. That's why it's a key question for any development actor, and in particular for all the European cooperation agencies. I'm the chairman of the association of all the cooperation agencies, and we've been working on that for quite a long time now. I was at the first summit of Global Gateway, and I remember that in the first round table, companies actually, maybe a bit provocatively, said that they didn't really need money to invest in countries. They needed a proper business environment that would secure their investment, and they needed trained local human resources. I think we should keep that in mind, because in terms of action, it means that we need to work from the bottom on the factors of production, and that's where we can have structural action, including working on the development of proper capital markets, etc. So it's a really key issue. And also from the top to explore new ways of enlarging the markets. And in that regard, in terms of economic opportunities, the development of, in Africa, for example, of the African continental free trade areas is certainly a way of enlarging also the market. So that this two approach is absolutely key. In that regard, and to make the link with the name of the roundtable, I'm really convinced that the European family, what we call Team Europe, is essential, just because you have such a diversity of actors and expertise all together. And we've been discussing about IYBA, ICR facility. I think what's in the philosophy of all those programs is that at the end of the day, if you want to support the creation of local markets, you need to leverage on local players. I mean, at the one that will finance the economy, it's goodwill. It's SOEs like in every country that are looking at how they can develop their own SMEs locally. That's how it will work, and that's the philosophy that we are working on. So to be very concrete, what we are doing currently at the level of Europe is, and NT mentioned it, we're working on this integrated investment package approach, this 330-degree approach on Global Gateway, where we need to emphasize also the key role of technical expertise. We need to work on very concrete demonstrations, examples, and we'll have soon a kind of hackathon between us in Brussels to explore ways of articulating TA and financial support. And last but not least, I'm very pleased that within finance in common now, there is this reflection on how to mobilize more TA for PDBs. I think that's a great way of going further and continue this way to the development of local markets.
So much. David, do you want to, what have we missed? Is there anything that you'd like to provide some input into the conversation?
Thanks, Kami. Yeah, I'm David Kuiper. I'm CEO of EDFI, the European DFI Association, and I think this is a very happy conversation because DFIs, it's clear from this conversation how important DFIs are as a bridge between public mandates and private sector mobilization, private sector finance. That's a traditional role we play, and I think we're now at the eve of a new phase in the evolution of DFIs. It's basically what I would call a new bridge function, where, can't hear you well, oh, there's a lot of echo here. We're faced with a new, we're at the eve of a new phase in the evolution of DFIs, where DFIs play a bridge function between early local opportunities and bankable deals. It's a bit of a change from the past because DFIs were used to, well, work as a bank, wait till deals would come at their desk, do the due diligence, and do their work with that. That's not enough in the current era. And I do think that we need to move quickly into this area of market creation. It's the examples that Simon mentioned are very important in that, but we need to bring market creation as such to scale. And what does that require? I think that has been mentioned here a few times, but let me pinpoint here also for the sake of time, just 4 main issues that we need to tackle. First of all, coordinated approach. Of course, everybody talks about coordinated approaches here in every panel. But here it's so important, and it's actually Team Europe is a very good basis for this, provides a very good context for that. And this coordinated approach is necessary because you need sustained efforts together to bring deals past what we call the valley of death. So shepherd deals through the very difficult phase of origination and stay with it in the phases after that. Then I fully agree with Simon, and I want to make that my second point, that at this moment we need to be concerned about the track ahead of us in terms of grant finance. The geopolitical context in which we work actually means that the value of grant finance is going to increase. The geostrategic value of grant finance is going to increase, and that's, I think, what we all need to realize, but in particular the political, our shareholders and the European Commission need to realize that this instrument is going to be extremely important to get geostrategic depth to your entire approach to development. And that is something that we would like to emphasize in the coming months ahead, particularly within the European budgetary process. Third thing is we all need to transform. I said earlier, DFIs are already transforming, are doing more on market creation, but it's a transformation elsewhere as well. Transformation at the side of the Commission, transformation further down the ecosystem with investors to understand what's at stake and to have unity of purpose. And the fourth thing I would like to mention is what I see increasingly as in the ecosystem of investing as almost like a second valley of death. After you survive the first valley of death, a deal is there, it's ready for financing, we can start offering it to investors. The second valley of death comes, and that's regulatory frameworks, where we are increasingly faced with disincentives for the larger investors that emanate from the regulatory frameworks that are there. And we need to solve this. These regulatory frameworks are extremely important for us. They're part of our product. They're at the core of why we exist. At the same time, there shouldn't be a disincentive to investment. So these are the 4 points I'm taking out of this discussion. Thanks.
Thank you, David. Colin, can I get some perspective in terms of, from your perspective, is there anything we've missed out?
Yeah, I mean, first of all, let me just say that, I mean, we at BII are big supporters of Team Europe. We believe that joint action in development is always more effective, both within the EU and without. And sometimes when we come to these conferences and listen to a lot of these discussions, they may sound a little theoretical. So maybe I can add 2 examples where practically this has happened, and that is in the countries of Sierra Leone and Nepal. Sierra Leone is a small, low-income country which DFIs, including BII, often thought of as being uninvestable. I mean, there was nothing there. But over the past 3 years, ARIA, which Kaval spoke about, has brought DFIs to Sierra Leone and done a huge amount of work really identifying investment opportunities. And much to our surprise, they've discovered about 50 investment opportunities, and they're working their way through the investment processes at Proparco, at FMO, at BII, and at other DFIs. And the second example is Nepal. And in Nepal, ARIA doesn't work there, but FMO works there along with us and along with the Swiss government on a program that targets the financial sector. And the message here is, if you are willing to do the hard work of reform, which means sort of every day coming up with what are the technical reforms that are needed, you can make genuine change. This is hard going. This is talk about tax and holding periods and so forth. But I was in Kathmandu 2 weeks ago, and I can assure you that that program has the ear of government as a trusted advisor, and as a result of their work, there is investment going into Nepalese banks today that would not have happened otherwise. So I think of that work of Sierra Leone and Nepal as testimony to the fact that when members of EDFI, with our shared values, work together, we can promote innovation and real advances in sustainable growth in even the most difficult of geographies.
Thank you so much. We spoke about this a little bit just before the session. And Nepal happened to be one of the countries that I put the regulation in and the policy. And it's so nice to hear that the capital is flowing. And the financial sector, which I followed, I think, over a 10-year period, and I looked at how it had grown and how it had changed. So setting the right policy lens, finding the partners, and then getting the capital to follow was a decades-long process. It's amazing to stand on the other side and hear that it is moving. Really great.
We build on your shoulders. Thank you.
Thank you, Colin. With that, Jean-Baptiste, Colin mentioned the work that you guys have done. Is there anything I need to consider?
Yes, so thank you, and thank you for all the testimonies which have been made during this panel. So I'm Jean-Baptiste Sabatier at Proparco. What I would like to add to what was mentioned when it relates to market creation, in particular in the current context, I think if we want to have market creation which are sustainable, we need to have them being local. And when I mention this is, first of all, I think it's definitely very important to join forces with local public and national development bank when we look at market creation, not being only ourselves European institution on this market, but we definitely need to have them on our side and be really partner. And then when it comes to market creation, we talked about different opportunities on the ground, on projects, etc. What we see and our conviction is also when we talk about market creation, we have, related to the financial mobilization agenda, we also need to have a look at to what extent we can play a role in creating the good incentive to the local financial market to have this money flowing to the project we are keen on financing and which are in line with our mandate. So basically, that was a point I would like to add, is that we really have to keep in mind to make it the most local possible and to build something which will remain if time changes.
Move across to Sam.
Well, thank you very much. I mean, I'm San Bilal from ECDP. I'm working a lot on the Team Europe approach and with all the actors, you know, at the European level, from the technical agencies and DFIs. I wanted to perhaps get back to what Ante was saying on the 360-degree approach and the need to be, you know, to have an investment package that is provided by the EU, and knowing that the ambition at the European level is to go with the global gateway from startup to scale up. And the comment of Simon, which I think was very open, and that was also echoed by David, that in fact there are pilot projects of cooperation, and we have also documented that and so on. So it's not that cooperation does not happen, but cooperation does not happen at scale. So my question to all the speakers is, how do we have cooperation working at scale? And the second element is that from the perspective of, the world is changing very fast. So if we keep going at the pace we're going now and trying to tell countries, I mean, market creation sounds nice, but let me be a bit provocative. I find it's a bit surprising that we say, as Team Europe, we're going to do the market creation at the local level. Look, like, if you want us to invest in your country, you just have to create your market. In fact, many are investing, local actors are investing, the Chinese, many emerging countries are investing in the market. So if Europeans are waiting for markets to be fully created and to be nice and respond to all the requirements of European actors, you'll come last and you'll become quite irrelevant. And the last part is, at the European level, there is a stronger realization that the world becomes harsher, there is less money for development, and there's a need to consider better the European interests, so to go to these kind of mutually beneficial, which the Chinese call win-win in the past. So we have discussions among development actors, but if you don't have the trade promotion and investment promotion entities also coming in that are going to help directly the European private sector to invest, so export credit agencies and so on, I mean, how do you expect that simply with development tools, you're going to bring in the European private sector? So I think we need to scale up a bit also our ambitions in terms of how we work, and to address some of the systemic changes instead of showing the nice pilot projects and saying we do nice stuff, which we know. I mean, all the institutions that are around the table are doing very nice work for decades. But if we, in the current system, I think it is not sufficient, if especially we are serious about the ambition. So I see a big mismatch between the ambitions and the tools that we have currently there. Thank you.
Thank you. A sobering reality indeed. Jean-Baptiste, and then I'm going to open to the floor.
Hi, I'm Anton Leis. I'm the CEO of the Spanish Development Agency. When I was invited to this panel, I was wondering why there should be a Team Europe window in a global platform like the Financing Common, which, by the way, is great because it brings actors that are concerned about financing development, and you don't ask whether you come from the north, the south. You have national banks, you have global banks, we have DFIs, everyone here, and if you look at Team Europe, we are doing great things together. We are the largest provider of ODA, and I know that ODA is less and less. Someone was talking about the scarcity of grant money. We are the largest provider of sustainable finance, but what I sense in the room is that that's not enough, that we are, well, first of all, is too little for the needs, and that we all feel that we are not doing enough collectively. And I think we are right. And we are living challenging times. We are looking at geopolitical developments. I think David was alluding to that, and I think that's the elephant in the room, is that there is less and less actors that are committed to sustainable development, and there are questions around the world. I think one important point of having a Team Europe event is that Europe and Team Europe is still committed to this agenda, and that is indeed a very important point to underline. In difficult times, you stand by your friends, and it is very important that we send our partner countries around the world, and that doesn't mean only governments or development agencies, but all of us, investors, that Europe is there, that Europe still believes in climate objectives, in reconciling climate and people, in supporting our partners around the world. So what is it that I think we need to do together? Well, and some of the points have been made before, but one is break silos, and I think Team Europe is precisely about that. We have JEFIC, we are part of it, we are also part of the practitioners network because we also are an implementing agency. There is the DFI colleagues that play a major role in bringing also the private sector. We work very closely with COFIDES, which is the Spanish DFI. We have the EIB, but all of us, we are too small. And I think San was alluding to that. We are doing small projects here and there. When do we bring it up to scale? When do we're going to have a major conference, the fourth Financing for Development conference in Sevilla. In Sevilla this summer is better linkages with trade, with investment, like move from a project perspective to a more transformational perspective. Number two, I think we need to develop a comprehensive package, and Antti was referring to the Global Gateway 360. We need to do investments, but we need to look at policies as well. The enabling environments, and I agree, we don't need to wait for the enabling environments to be fully there, but we need to work certainly in parallel. Third, we need to transform ourselves. I think we need to look at our instruments. They are probably no longer fit for purpose. We are doing precisely that in Spain. We have a law. We are reforming our agency to invest much more on partnerships, look less at what we do on our own and how we activate and we work with others. I think there was a very good discussion earlier on about the interoperability and how we rely more on others and how we focus less on what we do alone and how we bring others to the projects and the programs that we do. And then fourth, and I think this is very important, we need to develop a new narrative for cooperation, for sustainable development. Remy was alluding to that. Aid is important, and I think grant money is still important. We are probably like the salmon in the river, swimming against the stream, increasing it, but we need to talk more about investment, more about partnership, more about mutually beneficial relationships. Our partners are ready for it. Our citizens are also demanding it as well. Some of this investment is more obvious because we work with reimbursable instruments, we need a financial return, we need to bring the private sector, and of course the private sector needs to make a return. We need to bring real investors and investment into these countries. Some of the investment is more long-term, building relationships, like throwing in other types, like broader partnerships. But let's also don't forget about the values, the value of solidarity. Our South African friends are convening finance ministers today, and the theme they've chosen for the G20 presidency is equality, solidarity, and sustainability. I think those three values are something that Europe and Team Europe represents, and everyone around this table represent. Development agencies, more of the public side, but also our own investors, our private sector as well. That's Europe's value added and our value proposition to the countries where we work. So challenging times, but also times for opportunity, and I think opportunity certainly for Europe and Team Europe to step forward.
Thank you so much. My sincere apologies. It is too late. My brain, between my handwriting and the time, I called you Jean-Baptiste. It's actually Anton. My sincere apologies.
It's a beautiful name, though.
I really am sorry. I'm going to open it up to the floor, and now you are standing between yourself and your drink this evening. So any questions from the floor? Simon, the room is not going to like you, but I'm going to leave it. You're standing between their drink.
Can I just try really quickly with a couple of threads? One is the locally led side of things, and Coleman and Jean-Baptiste, you know, with the Nepal reference, we work in Nepal. 99% of our team members come from Nepal. We've got 350 or so team members in Ethiopia. I think 5 of them are not Ethiopian, and so particularly when we're thinking about the need for smaller ticket sizes or on lending mechanisms, you need that contextual understanding, you need that precious commodity of trust. We've got one in Nepal, I think it's, top of my head, Pico Hydro, it's a mechanism called REAP, I think it's Austrian government funded, small ticket sizes, and you can only do that when you've really got that contextual understanding. Paul, I think that you were kind of staggering me with the huge numbers and the examples of how little really big ticket sizes there are going in. At the same time, San, I'm hesitant to sort of go too far into the statistics, but you can correct me later. But something like well over 50% of Africa's GDP is through the SME sector. Over 60% of labour workforce is in the SME sector. So figuring out the balance between the big ticket sizes and fueling or supporting whether it's IYBA and job creation through SMEs or otherwise. And I think, Antti, perhaps there's a danger that if Global Gateway goes further towards a competition with BRI and goes hard on thinking that scale means big tickets and big infrastructure, well, that's further fragmentation and further competition. And how much does that actually align with Europe's comparative advantages when we think that much of Europe's economy is a service economy? Yeah? So thinking about comparative advantage and how to bring down the cost of borrowing into smaller ticket sizes. And my last point is back to my first one. So that's what I was saying about how the important but small work that my organization SMV does with the wonderful collaboration with FMO within the Dutch Fund for Climate Development, how can all that precious technical assistance provisioning, how can all that due diligence work that we do for years, how can that be priced in or transferred over to other lenders if FMO are, for whatever reason, not going to make that investment? So that's what we need to figure out to bring down the cost of borrowing for those smaller ticket size as well as the big ones.
Thank you. I'm going to let you continue the conversation in the bars out of Cape Town. Thank you for staying with us. I had one question that I was going to end the panel with, but I am aware of how late it is. It is the second day of the conference. But I am going to leave it as food for thought. I want to end this on a hopeful note. I want to end it on a note of us looking to the future. There was a conference I closed my speech with, actually, with a room full of regulators, and I said, I cannot think of a more exciting moment in history. We get to be a part of the generation that defines the future. And we in this room are the people that write that history. I like Simon's example of, I was here when Nelson Mandela came out of prison. I was here too. But I think the better story to tell in 2030 was I was there and this is the contribution I made. So as you go away to sit in the bar tonight and enjoy some drinks, think about the contribution you want to make as a leader, as a member of society, because when we get into the next fix, that's the question that we're going to ask next year. How do you see yourself and what is the contribution that you would have made to Agenda 2030? Ladies and gentlemen, thank you so much for staying with us so late. Enjoy the rest of the evening and enjoy my country. Good night.